Hey everyone, welcome back to the Mortgage Heroes Weekly Podcast Show. I am Andy Cruz.
I'm Will.
And I'm Brian Landeros, a.k.a. Brian Lands Money _ on Instagram.
Very good.
Hey, you know what? Before we get started, I would love to give a quick shout out here.
Let's go.
I'd like to thank all our clients, our realtor partners, and all the people that are just liking our stuff. They're giving us feedback. It means the world to us, Andy.
Yeah.
I know it's very difficult to get on here and to discuss these certain topics, but when we're getting that feedback, it motivates you.
Yeah.
It makes you feel like you're doing the right thing. So continue to give us those shout outs. That feedback is so important. So we appreciate you.
Yeah.
And I love.
Yeah, that's
awesome.
Great way to start the show this week. We've been starting to get a little uptick in far as people's comments and their feedback.
Yeah.
Obviously, now we're also putting some of the show pieces down YouTube Shorts and Instagram Reels and starting to pick up a little bit, especially because guess what? We got to talk about what's going on in the market. We got to talk about what opportunities there are, and some of it is maybe less favorable. But
that's it.
Our job to do right now in this season of life is to interpret what's happening and give our years of experience to everyone to make their own decisions. So
only a few years.
A few years, yeah. Let's not. You know what? When you
I don't give up my age here.
When you go from years to decades, like combined decades.
Like, how many years are here, huh?
This is not Botox yet. No.
So I saw a joke the other day that said, why do you get so much wrinkles on your forehead? Because when you're in real estate, it's just the expression you make all the time when you get used. Oh, wow. I guess that's what's happening, huh?
That's awesome. Good point.
That's good. Well, today, guys, we're actually going to bring what I hope would be great news for many people here in California, specifically San Diego, where we serve. This week's topic is the CalHFA Dream for All program.
Yeah.
So we're going to talk about some of the program details, everybody who's watching and listening in. We'll talk about some of the program details. We're going to talk about some advantages of this program, and then discuss maybe if there are any disadvantages. There might be some, but I think it's really nitpicky, but we'll get into that too. So who wants to start to talk? Let's start talking about what is this program all about.
Well, let me duplicate Brian here because that was me. me. No, I think this program has several great advantages, and I think it's a great program, and obviously we're going to go through that, but a lot of great advantages, Andy. It does like anything else. It has some disadvantages, but I think the advantages will supersede the disadvantages.
From other down payment assistance programs that we worked at in the past, I feel this one's the most straightforward and just, makes sense. So I'm eager to get into it in the details. And obviously addressing the elephant in the room, you're going to get 20% down.
That's it.
Up to 20%,
Yeah, up to 20%.
And what's cool about that, you can actually pick and choose.
Yeah. You can skin the cat however you want.
You can do 10, 15, 20, whatever.
Right.
So very different program than others.
Than some other ones, yeah.
Yeah.
So what are some of the program details? Like, give me some basics. So run me through the program. For everyone's listening who's never heard of this, tell us what they should know about right out the gate.
So first of all, you have to be a first-time home buyer, meaning that, you haven't owned a house or purchased a house in the last 3 years. So that's going to be one.
Wait, it's only 3?
Wow,
that's the qualification for new home buyer now or first time?
I didn't make it up. So
well, of course not. I'm not going to shoot the messenger on that. So that's it.
No,
wow.
that's exactly it.
So 3 years.
That's
Listen
great.
up. If you haven't owned a house in 3 years or haven't purchased a house in 3 years, then this is definitely something that you can benefit from.
Or you purchased a house and you haven't, you sold it 3 years ago.
And you've been renting.
That's it. It qualifies you.
Okay. What's next? What else?
One of the good things I like about this program, if you do decide to go with the 20% down, you are removing mortgage insurance, which could save you up to hundreds and thousands a year. So right off the bat, that's going to transfer into having a higher purchase power.
Yeah.
So from experience, I actually approved one of my clients that got approved previously with an FHA loan at $700,000.
Yeah.
Wow.
And then we went around and used this program, and now we bumped up their purchase power to $900,000.
Wow, that's crazy.
No mortgage insurance, 20% down.
Hello.
Hey.
How do you go wrong?
So they just completely got over.
I think we stop here, Brian.
Yeah.
That's it.
Guys, make sure you send us an email message. No, but I mean, that's how.
That's a great story. That's a good, tangible, hey, this happened.
Yeah, it's very straightforward. And that's one of the reasons I like it because it's like if you get approved for it, you get approved for it. But now the downturn is that there's only limited amount of funds.
Okay, talk about that. So
well, that'll be a disadvantage. So we'll go there, okay?
Okay.
So right now we want to just kind of give the advantage of it.
Yeah.
The cool thing about that 20%, there is no monthly payments for that.
Okay.
It's a 0% interest.
Got it.
On that. Mm-hmm. So you're essentially, you're buying a $500,000 home just to keep it simple. I don't think we can find anything around here at that, right? But
it's a good example.
You bought a $500,000, you borrowed $100,000 for a down payment.
Right.
You got no PMI. And there's no payment on that $100,000, 0% interest, and no payments.
Yep. Silent second.
So when does that get paid back then? How does that work?
So that's a really good question. There's actually a few triggers, right? And the way that this gets triggered is by refinancing for a second time. Probably wondering why a second time, because you actually get one time free refinance. Not free, but you get to refinance without
where you don't have to
pay it back, right?
Got it.
But now at that time you go and refinance for the second time or decide to sell your property, that's going to go ahead and trigger you to pay back that amount.
So what do you owe the program if let's just say sell, that's easier. Let's say that you sell the house, you owe back the 20%, and then what else?
And then depending on your gain, you're going to then either give a 15 or 20% depending on your income.
Depending on your income will determine how much equity you have to give back to the program.
Yes. So
okay, interesting. All right, cool.
So
previously
I thought that you had to pay back another 20%, so double that. But it doesn't turn out like you pay 20 or 15% of the earnings. So let's say you gain in the next 2 years 25% of your property, right?
Yeah.
You say, hey, I'm going to just sell this, get out of it, whatever it is, what it is. You then have 5% left after you paid back that 20%,
I see what you're saying.
So off that 5%, you're going to go ahead and either give 15 or 20% back.
Yeah.
And then the rest
I get what you're saying.
Home.
Yeah. So it's a partial of a partial. Yeah.
That's
so
basically
appreciation.
You're basically giving a proportion of your gained equity back to the program in addition to the part you took as your down payment. Got it.
Correct. And that's actually not a bad thing because there's other programs that were 35%, Andy.
Oh, wow.
In the past.
Wow.
Or you had to pay back at a rate.
But they weren't even giving you 35% as down payment. So they're basically taking more on the back end than they were giving on the front.
That's it.
Oh, interesting. Okay.
Way to invest to our clients, right? And gain some back.
Okay.
So this program is more of an equity appreciation share type of program. You know what I mean?
Yeah.
Which is still not bad. It's not bad at all. And what'll happen is if you do refinance for the first time, they're going to subordinate
the second.
for one time the second.
Okay.
So if rates are, let's just say right now that 6 1/8, this is more or less where we're at. And they went down to 4 1/8. You could go ahead and refinance for that first time. Okay. In a year, 2 years, you're not going to have 20% equity in
Right.
there.
Right.
So it'll be strategically.
Meaning you'll have more.
Meaning, if things go the way they are, right? Homes just appreciated 8%,
Yeah,
so,
I know.
in this past quarter. So who knows? Who knows? But you can still strategize. So there's still ways of.
So this, for some people though, this could be the difference of getting in a home right now or not.
Oh yeah.
I mean, 100%. It sounds like kind of like, okay, maybe there's this back end thing, or you got to know these other parts along the way. But like this could be the difference of people getting in or not getting in right now.
And that's one of the advantages. 100%. Advantages is leverage, right?
Yeah.
We want to leverage. So if somebody's giving us these funds, now's the opportunity to leverage that.
And taking it a step further, right now is the time to go and reach out to all your previous clients that you approved that maybe weren't approved for the amount that you'd like them to be approved.
You're talking to agents now, right?
Yeah.
Or loan officers.
Anybody that honestly can benefit from it, like honestly, is you're actually also able to then go back and help them either get approved for more or be able to then get them into a better position,
That's good.
So now I see that a lot of people get approved for around the 500, 600 mark, and it's a sweet spot where everybody's approved for that amount, and there's really not much, inventory for that amount. So this is really going to give you a competitive edge, and I also feel it might give you a little bit more pressure on the market in these, early months as, the funds run out. But I mean, it's a great program, and those who do take advantage of right now, 20% right now, who's giving you that?
I can imagine
at 0%. What bank is giving you that right now?
Well,
especially with rates.
They're not. They're not. I mean, even if you were to go borrow from a private lender, they're certainly not going to give you something
Of course
like that.
not.
But I think this is going to cause I shouldn't say cause. I think the reaction to this is going to be there could be quite a line of people looking to get this kind of program they can get in. But when I'm looking down the road, like my econ brains all are like, oh, well, this is going to keep house prices high because now, like you said in your example, Brian's like, hey, these people were qualifying for 700, now they qualify for 900. Well, there you go. That helps keep the prices where they're at right now.
And here's another thing. So another advantage with the 20% is you can use it in different ways, right?
Yeah, talk about that a little bit.
Some of the people, they're like hesitant, like, we know a lot of people who are VA, 100% financing, but what keeps them and prevents them from buying is, I don't have money for closing costs, right? So in this program, what's great about that is I'll use 15% as a down payment, and I'll use the other 5% to cover my closing costs.
You can use for closing? I didn't know that.
Yeah,
absolutely.
So you could even use it to buy down the rate as well, since it's a part of your closing costs.
I didn't know that. I didn't see that in like the top line details.
If you have a rock star agent, they can go even and get more credits from the seller and use that to buy down your rate. Hey, I'm not giving you guys an idea of what you guys should be telling your agents to do, but hey, these are the opportunities and possibilities you're able to do.
I didn't know that. When you guys first told me about this, I was like, oh, that's a cool new down payment assistance program. Awesome. I literally was just down payment only. I didn't know you could use towards closing costs.
Yeah, absolutely. And there's like a tier also, right? So if you're going to loan to value, 95 to 100, your PMI is at, I want to say it was like at 6%. Oh, yeah.
Let's go. Let's
prepared. So it's actually 80 to 85, 12%, 85 to 90, 25%. So that means 25. It's low mortgage insurance. It'll probably be like 80 to $150.
So it makes sense to either utilize it to get no PMI or just skin the cat, bring down your closing costs, and come out of pocket no money to a house, potentially $1 million.
These are the realities that are happening out there right now. I mean, these are the true realities that's keeping from people. I don't have money for just closing costs.
Right. Yeah.
Let alone a down payment. Now we have down payment and closing costs. Hello.
Well, I also think, remember in an earlier show this year, we were talking about how like the market's going to have to get creative. We're going to see all sorts of new things come out because they need things to keep going, right? So I think this is kind of, this fits in that box of like, hey, we're going to see some creative stuff come out because it has to. This is interesting. I'm super interested in this.
You mentioning that, I forgot. I think I'm just getting older, right? It's already kicking in.
One of the things that I noticed is that it's very simple. It's like a straight regular approval. Like you're getting approved for a regular conventional FHA or VA loan, and as long as you're able to get approved through that, then honestly you're good to go.
There you go.
Wow, that's awesome.
So it's not like you have to go through a separate type of approval or a separate like complicated process. It's the exact same thing. Streamlined.
What's the estimate as far as like, so because you're dealing with CalHFA as well, like is there an estimate on what does the closing time frame change? Is it the same closing time frame?
That's the magic question.
Talk to me about that.
And I feel everyone says 21 days, but it really comes down to everybody that's part of the transaction, right? So if nobody,
that's true.
So everybody could say 21 days, we could be ready, but again, in real estate, every transaction is different, but my goal is to basically get it done in 21 days.
Okay.
But like I said, it could take a little longer.
Well,
Something happens on both
here's
sides.
the old traditional way of how things were done with CalHFA as well. Before, we had to get what's called a clear to close, which means all conditions were already met.
Right.
By the sellers and by the buyers. Then once that was done, we would send it to CalHFA, and they would actually complete the approval. So that would take another week, 2 weeks at that point in time. Luckily, we are our own money source, and so we don't have to go through that.
That's awesome, because that's what I was thinking about. That's why I asked the question, because I remember that from the old days. I'm like, man, this
45 to 60 days.
Delayed
That's what
closings.
It was.
And the other thing, too, is that, like, again, back to the whole program volume, depending on how many people are like funneling in the front door of this program, I'm sure that might weigh in on it some, but it's certainly not going to be like before, it sounds like.
Correct.
And here's another disadvantage, but I like to see it as an advantage, is you do have to take an 8-hour course. So you know exactly what you're getting.
That's a disadvantage at all. Most people,
that's why I said a disadvantage, but an actual advantage, because then you're actually able to know exactly what the program entails about. And I'm sure you're going to hear it all over social space, all over, your sphere of influence, like 20%, but do the due diligence and actually get educated, because, it sounds great in just theory, but there's a lot more that goes when you
I'd have a hard time making the argument that an 8-hour education course is going to be harmful.
Well, Andy, you'd be surprised.
School.
You'd be surprised how many millennials are going to be like, no.
Andy likes school.
But the good thing is that only one borrower that's getting approved needs to take the class. So you could either go 8 hours, 4 hours, but I recommend do.
Okay, so like if you and your spouse qualify, only one of you actually has to take the course.
Yes, exactly. So not both of you guys have to do it.
So
flip a coin.
Flip a coin.
Flip that coin.
Hilarious. You're like, hey, we played rock, paper, scissors. I lost. I'm in the class. There we go.
Another example was that we tried doing this program for another client, and on the contrary, they were already max approved on FHA. This is a conventional product, right? So when we try to go do conventional approval and give them the 20%, it actually didn't give them a higher approval, and the FHA route minimum with 3.5 down was a better route for them in that scenario. So it's not for everybody, but those who do benefit from it, it's really
it doesn't hurt.
Well, that's good though too, because for the amount of people we talk to, like I guess the step upstream of going, hey, let's see if it actually helps you or not, is obviously the right step financially, 100%. Being a fiscally responsible loan officer. But also for people to know, okay, well, guess what? It isn't the right thing for me. That means I have confidence knowing that what I already had approved is what I'm going to proceed with. So I think that's good too. That's an advantage in my opinion.
Yeah, no.
That's a good way to look at it.
Right? Then I guess the disadvantage would be it's $99.
Yeah, there you go. The disadvantage is you got to pay $99 for the class.
Oh,
right?
the class.
So hey,
The class.
that's actually true.
Yeah.
So there it is. If you like school, perfect for you. If you don't like pain,
Hey,
That's
$99 fee.
CalHFA, hey, we're about to give you 20% now. You can pay $99 for this.
Yeah, I know, right? I don't think you can tack that one into the closing costs, guys. So you're gonna need your credit card for that.
I wanted to ask another question, and again, I don't know if this is a disadvantage or not, but what's the program like? There's a bucket of funds, so there's a bucket of money. How much money is in that bucket, and like what's that all about?
$500 million.
With already 90 million being used up already.
So there's 500 million total that's allocatable to this use, and how much is already used?
90 million.
90 million is already spoken for. So there's like, at the time of this recording, there's like 410.
Oh yeah,
More or less, yeah.
yeah,
Left.
probably a little bit more.
That's how popular the program is.
Yeah.
I try to say the 500 like Austin Powers because it was 1 million,
500
right? So I try to go
million.
like that because it's like it's so little. It's going fast.
That can go way fast. Because I mean, you think about here in California. Let's do quick math. Let's say a $500,000 house, like you're talking about. 20% down is $100,000. Right. So 10 of those a day is $1 million. So if you did 10 approvals today and each of those were the same scenario, that'd be $1 million just in one day.
Yeah, what he said.
Yeah.
But it's not. But it's more than 10 because it's the entire state.
Yeah.
This is going to go
this
pretty
Hispanic
quick.
needs a bunch of beans. So
No.
I'm here in front of me. I couldn't count.
This
Like
is probably
calculator.
gonna go pretty quick.
2.5, 7.
Yeah, but
So-
that's 5,000 families.
That would be 5,000. Yeah, if it was that scenario. Yeah.
Yeah, 5,000
5,000
home buyers that would be able to participate
in that
in the program.
if they had that exact scenario.
Correct.
But I guess so I feel both ways about this. I'm like, on one hand, I'm like, wow, that's amazing. That's a lot of money. But then I did the math real quick.
Yeah.
I'm like, wow, people should be quick. They should be moving quick.
Yeah.
That's
Because if
correct.
you don't know, or you're like, oh, I'm gonna wait. Like, don't wait. Start now.
Just see.
And then if you decide differently later, well, at least you started the process.
That's it.
Yeah,
That's
and
my opinion. That's my 2 cents.
great
It
opinion.
doesn't hurt to get pre-approved and see
Yeah.
how much you could secure and see how that looks for you.
Yeah.
And I guess then when the fund is closed, the fund is closed. But well, here's what I'm going to predict. Here's a bold prediction. I guarantee that they will make more funds available if this works.
Yeah.
And if it goes quickly. If this goes in less than 6 or 9 months, the state will come up with another way to do this. So again,
Correct.
Boy,
They did it for ADUs.
Hey, boy, will the real estate industry love that.
Yeah, and they did it for ADUs.
Yeah.
Same thing.
Yeah.
So.
I'm going to call it right now. If I'm wrong, I apologize,
Yeah.
everybody. But if I'm right, I'm going to take a victory
But no,
lap.
I can
Yeah,
see
there you
that's like a pilot program right now to see how it works.
Yeah.
And from what we're seeing, it's working.
Well, yeah,
Correct.
I mean, look, if we have everyone funneling through the front door and they use that $500 million like super quick, it's
Yeah.
obvious that that's a need that's going to be met with a lot of
absolutely.
demand. I
Yeah,
can't
of
see why they
course.
wouldn't do it. They'll come up with money, especially if they're sharing it on the back end.
Yeah.
They will make a way.
There's always a way.
Yeah, there is. There's a will right
There's
there.
a will. There's a way.
Where there's a
The
way.
other, so the other disadvantages for everyone, it's only here in California.
Yeah, only here in California.
Only here in California.
Only here in California is that expensive.
Yeah.
Because California,
Knows how to party.
there we go. It's a different conversation there, but yeah.
Anything that we didn't touch on yet about the program that like people need to know about? Obviously, there's a couple of specifics about the details and what you
Yeah.
got to do, but
Well, here's a great thing, being the details, all that, etc. The great thing is people have to take a course.
Yeah.
So they're not gonna go into something not knowing what they're getting themselves into.
you just told me I was a nerd for saying that was a good
Yeah,
idea.
no, it was great. I mean, I'm just gonna get Tanya to do it anyway.
It is an advantage, yeah.
But it's a huge advantage to know there's no fine print. Like now you can confidently sign your document knowing that there's no fine print with it.
Yeah.
And so
No, that's good.
most of the time other programs is just you gotta find that fine print. And you either need to have some big bifocals to be able to read that or a magnifying glass, one or the other.
Or a really good loan officer to break
Yeah.
it down.
That's
for you.
it.
A great
right?
loan officer. No, that's a
So
good point.
those are great things, So again, that could be a disadvantage to some people. I think it's a huge advantage, just the $99, but it's only here in California. It's an equity share program, but I think it's leverage at its best. If you don't own a home and have the means to be able to get into something without having to pay something out, except for your $99,
Yep.
why not take advantage of that?
So
That's leverage at its best. Would you guys agree?
What do
100%.
It is. So
100%.
Now I'm like, what do we want people to do right now that are watching this or listening? What do we want them to do?
I think take
What's
action.
the first thing they should
Take
do?
action.
Take action.
Okay,
because
which action should they take first?
they should honestly see if they're looking to buy a house right now. Honestly, do what we talked about at last podcast. See how that plays out for you in your finances and your budget and in your plans down the line.
Okay.
So that's the first step, knowing your situation.
Yeah.
Second step is then speaking to a professional to know what that looks like in numbers. And then from there, taking the informed decision whether the numbers make sense or not.
Yeah.
And then you know exactly.
And you can make
you're
your
not
choice.
doing it blindly.
Yeah,
and you're
yeah,
not
yeah.
being advice for someone that, is not showing you the facts.
So in other words, don't overthink it.
Don't overthink it.
What does overthinking do? What has overthinking it been doing for you now?
It
Causes
honestly
delays, yeah.
Causes delays, causes you to just hold yourself back, doubt. So it's like, if you figure out, you know exactly what to do. So once you get that approval, once you get your numbers around, or what you know what your finances is looking for, clarity.
I guess now that we're talking about this, I want to say to our audience members that are already our clients, or they've already closed, they already own a home, I want you to think about your family members, your friends, your close friends, your coworkers that have been saying, that maybe they've even been complaining. So open your ears and your eyes. Like if you see someone complaining, you hear them complaining, or they may be a little deflated in their home search, like that's the people we can help. If they have not owned a house in the last 3 years, then they will qualify. Obviously, they have to qualify for a loan. But that's what you're looking for. Someone who does not own a house right now, has not owned one in the last 3 years, and they really want to get in the market. They've been unsuccessful in doing it. You're standing in front of someone you could be helping right now.
Or you're that family member that doesn't own a home and will be the first one.
Yeah.
Perfect opportunity.
Yeah.
I feel right now is a perfect time to get your foot into wealth building and secure your financial future because no one else is going to do it for you.
Yeah.
That's it.
Well, and if this is going to be the most advantageous part in the market right now, aside from maybe VA or FHA in certain circumstances, like this is a new product in the market that's going to help close the gap between people being able to get in real estate and not.
100%.
That's it.
I love it. This is
That's
awesome.
it.
Yeah,
This is real good.
Yeah. I mean, other than that, guys, I think this
pretty much covers it, a lot of it. I think any other questions, like honestly, it's more geared towards specifics.
Yeah.
Yeah.
But other than that, the main points.
Yeah, that's what I'm gonna say. Like if you're watching this and you're like, hey, I've got questions after this, or I want to know specifically what my scenario is, like call Will, call Brian, comment on this video, or if you're listening to the podcast, you can come to us on mortgageheroes.com and you can reach us there. Like, don't hesitate to take the next right step in your life if you want to get in real estate.
100%.
That's right.
Yeah.
Yeah.
Okay. Well, this is great, guys. I mean, I really appreciate. Thanks for bringing the data to share with everybody. Thanks for bringing your opinions on what is great about it, what might be some setbacks. I think actually there's way more advantage to this than disadvantage.
Yeah.
And I'm really excited to see how many people we can
That's
help right
correct.
now.
Yeah. I'm excited too.
Me too.
Good.
I'm going to go call my database.
Yeah. Okay. Brian, see you later. Memo, see you later. Time to make your calls, everybody. All right. Well, thank you guys once again for tuning into the Mortgage Heroes Weekly Podcast. We will see you again next week.
Bye,
There
guys.
you go. See ya.